Hello, investors. This is Ted Zhang, portfolio manager at Revere Asset Management. Today is Friday, April 25th, 4:19 p.m. coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Stay in the market. We are in a short-term uptrend here. We had fall through day, April 22nd, and we also classified yesterday as a fall through day as well. Market leaders, we've upgraded to a green arrow due to the recent action. However, we will still continue to stay flexible if distribution comes into the tape. Short term, above the 21 EMA, I believe second or third close above now, and therefore we have a green arrow there as well. Medium term, still below declining 50, and therefore we have a red arrow for that, and long term, still below the 200-day moving average for the major indexes. over 21 list under construction, but I'm sure next week we will have one for you guys. Big 8, up 2.72%. As you can see, that was the clear leader today. RG8 up 0.23%, S&P up 0.74%, RSP down 0.16%, Qs up 1.12%, QQEW up 0.64%, Dow Jones down 0.04%, mid caps down 0.52%, small caps down 0.28%, global 60/40 equity bonds up 0.4%, and GROTECTION up 0.38%. As you can see, S&P and Nasdaq reclaimed key levels on mega cap strength is today's summary. So jumping right into it, let's talk about the key level S&P reclaimed. And of course, the first one, talked about on the podcast, Don gave the sequence of events for us to turn out of a bear market into a bull market. We've reclaimed the 8 and 21 EMA so far. Today's a second close above the 21 EMA. But more importantly, we reclaimed this 5,500 whole number as well as the previous breakdown level. We closed above as well, even though volume was light. But that is a great start. And now the next level we're contending with is the declining 50. That will be key, and then the declining 200. So we'll definitely have to see what happens there. We also broke this downtrend line as well. Another key level would be reclaiming this 57.73 level, and that would trigger another undercut reclaim. But we're just taking that day by day, week by week, and making our decisions based off the action. RSP, same thing, but didn't quite reclaim the breakdown level yet. It is forming a tight 3-day flag here, so we'll see if this resolves to the upside, and itself will contend with the 50-day moving average. Qs reclaimed the 466.43 breakdown level, and now like same thing with S&P, contending with declining 50 soon, which is currently at 480, and then the 200-day is at 491. QQEW also reclaimed the breakdown level. Great action so far, and really it'll be key to see what happens at the 200 and 50-day moving averages. If this is a longer bear market, my expectation is we do reject there and head for another leg lower, but we continue strength higher and reclaim those key moving averages. Perhaps this is just a quick Trump tariff scare blip and we're back into an uptrend. But we need to continue to see the leaders and more groups join the uptrend. That is the greatest indicator that an uptrend is sustainable. Dow Jones Industrial Average is relatively weaker. We did have that huge UNH, United Healthcare fail, and we are flagging here. So let's see if we resolve to the upside. We did close above 40,000. Mid caps, a little weaker as well, trading like the RSP, and typically that happens. The mid cap index quite often mimics the RSP. And we are flagging right here like the RSP, still below the breakdown level. So see if we can reclaim that. Russell, weaker as well, flagging like the RSP and mid caps. See if we can resolve to the upside there and head into the declining 50-day moving average. And those will be key. I'm going to go back to S&P 500 and put up a weekly chart. We're pretty much right into declining 10-week moving average, and that will be an interesting level to see whether we start reclaiming some more moving averages or we reject and head for another leg lower. The VIX, really constructed to see the VIX break down, especially below 30. Now we're below 25 too. So if we can see the VIX get below 20, that definitely does add some fuel to the fire and supports a potential healthy uptrend. Dollar continues to struggle around this 100 level. That remains the key support resistance level. Right now, we're kind of just bear wedging here. Gold, probably put in a short-term or intermediate term top for now. Highest volume ever, or not ever, highest volume in a while, bearish engulfing reversal, and now we're just starting to oscillate here. Gold needs the base after its huge move. Gold miners, similarly to gold, also starting to pull back to its 21 EMA. Still fine action right now, but definitely some tiredness and exhaustion. Silver, I'm not the greatest fan of silver, especially after the failed breakout and this mini 3-day crash, and then this wedging rally that has been below the volume of the selling. So that is not as constructive. But if we continue higher, perhaps silver does have some legs. Bitcoin is a standout to me, though. We retested the previous base breakout, the pre-election breakout, and this would equate to 74,000 on Bitcoin. We also held a rising 200 day. We held a rising 40 week. Bitcoin also held a rising 40 week. And now we just put in a huge week on all blue volume bars and all blue days, which means all up days. And this is the next level here for Bitcoin. 8 and 21 above the 50 now. And this is definitely a name we own in Turbo and in Grow. And this is a name we want to add more into, especially as it works. Now, bonds, failed breakout, failed breakdown. We saw many pod shops and funds blow out of some of their over leveraged positions. And typically, when you have big moves in the treasuries market, it's often some sort of hedge fund or other type of fund over leveraged in bonds, and that's what we saw happen. So now it's good that bonds are being bid up with yields coming down, because with the lower tenure, it really eases off pressure off the overall economy, off people's mortgage rates, and off the cost of borrowing. TLT similar action as well. Failed breakdown so far, and then the TYX 30-year breaking down, which is good, and the 10 years breaking down right now, trading at about 4.26%. Mag 7 was the leader of the day. That made GS ETF 4 days up in a row, reclaimed the breakdown level as well, but now it's heading into the declining 50 and declining 200. So this will be key, as well as the declining 10-week and declining 40-week. And we will see what happens here. I did find huge support at a key level, so maybe that was the low, but we might have a lot more chop before we enter a nice uptrend once again. And with that being said, that's it for the inter-asset correlation. And now onto the tail of the tape. Notable details, VIX again around that 25 area. Good to see. We're back operating under the bull case. We're back above the 21 EMA. That triggered for April 24th. Today's news, Michigan sentiment final came in at 52.2 versus 48.5. So that is good, healthy reading. Today's keys, we're watching S&P and Nasdaq versus 21 EMA, which we closed above. S&P versus 5,500 resistance, which we closed above. And then leadership stayed robust and healthy as well. Day count up 3 to up 4. 3 days above the 8 EMA. 2 days above the 21 EMA. Short-term expectations are positive. Intermediate, long-term, still undecided. Long-term is definitely still negative for now, but things can change. Action, pretty much open flat, based, made the highs of the day, and then we based again. The key to remind ourselves here is that the S&P ATR is still large, and that is because it factors in those 3 super volatile days near the recent lows. But that is fine, and we should see that continue to drop off, especially as those days are phased out. Strong sector stay, bonds were up, dollar is up, tech, discretionary, and communications. Mega caps were the leaders, Bitcoin and ARK-K. On the downside, builders, financials, and energy. Gold miners are down, and gold and silver, home builders, and biotech as well. All we did today was double QLD on the successful retest of the 466 level. So our beta is 0.5, 2.5% open heat or rebar, and our bottom line is S&P and Nasdaq reclaim key levels on mega cap strength. Our Monday keys, we're watching the S&P and Nasdaq versus 21 and 50 day, S&P versus support 5,500, and continued leadership to emerge and follow through. So that is it for the inter-asset correlation. I will show some of the repeat names I showed in the Tuesday video of relative strength names and see their continued action. But I want to quickly run through the mega caps because I believe it will be key to see what they do against their declining 10-week and 40 weeks, and that will really determine the direction of indexes as well. Because as you know, the mega caps take up or represent the majority of the index market cap. So Apple heading into declining 10-week, 40-week, as well as 20 and 30. So it's still in a stage 4 downtrend. Earnings in 6 days. Amazon heading into declining key moving averages. Earnings in 6 days next week as well. Microsoft earnings next week as well, heading above the declining 10-week, but a declining 20, 30, and 40 above. Meta also earnings next week. So next week is going to be huge, declining 10-week above, as well as declining 40. So we have Apple, Amazon, Microsoft, and Meta earnings next week. NVIDIA heading into a declining 10-week as well as declining 40-week. Google recently had earnings. It closed poorly, though, rejecting the 50-day moving average. We don't want to see all these mega caps gap up and reject the 50-day and head for another leg down. Netflix, though, is the best acting mega cap into new all-time highs. We own this at GROTECTION, triggered a double bottom base breakout, and this is acting fantastic. Sorry, I don't know why market surge is glitching. Let me refresh real quick. And then finally, Tesla broke this downtrend line, reclaimed the 50-day, but still below a flattening 200-week. So we'll see what happens there. In RS names, Palantir, we own this at GROTECTION, broke this pivot 100 and really nice move so far. RS line blue dot triggered as well. Uber took a start on this in TurboTection, broke this pivot right here. Reversed today, but totally fine action for now. We're watching this 82.1 area next for another pivot point. Earnings in 12 days. I did a huge segment and deep dive on our podcast about Uber's fundamentals and technicals, so highly recommend checking that out. Netflix already talked about, so I won't go over it again. Spotify also triggering a double bottom base breakout today. Still buyable next week. RS line blue dot. Earnings in 4 days, though. Just extraordinary earnings as well. Triple digits the last 4 quarters. Sales, a little mediocre, but that is fine for now. We're clearly increasing their operational efficiency with increasing gross margins. And we had a intraday trigger right here, and this was caused by Spotify announcing they'll be raising prices internationally, not in the US. CrowdStrike also triggered this cup with handle breakout, RS line blue dot. That's a great sign as well as the markets are turning off up the lows. TJTX is near its 52-week highs and actually, near its 52-week highs as well. Triple-digit earnings in the last quarter. WGS, another one, approaching its all-time, or actually approaching its 52-week highs in this huge base. RS line blue dot as well. ADMA, another one, forming a cup with handle under this 24 level. Let's see what happens there. Earnings in 12 days. Microsoft is a Bitcoin proxy, so of course acting well since Bitcoin's acting well. Earnings in 6 days, and then finally Celsius. Honestly, less of a relative strength name at this point, but building a stage 1 base, and we're trying to look at some of these turnarounds as well, because those could often make big moves as well. Earnings in 18 days. So what we want to see is indexes continue to hold in there, avoid distribution, see more accumulation, start reclaiming more key moving averages like the 50, 200, 10-week, and 40-week. We want to see the current relative strength names continue to act well and not see reversals in distribution and breakout failures. And then we want to see more and more groups start joining this uptrend. A healthy uptrend is characterized by the gradual entrance of more and more groups and leaders. And that's exactly what we want to see. So with that being said, I'm going to wrap it up for this week. If you have any questions or you're interested in becoming a client, you can always reach out to me at ted@revereasset.com. My Twitter is also TedHZhang. Feel free to DM me there. Our phone is 855-REAL-WEALTH. That is 855-732-5932. And our website is revereasset.com. Our YouTube is Revere Asset. That being said, I'm going to wrap up today's video. This is Ted Zhang, portfolio manager at Revere Asset, telling it like it is. Thank you for listening, and have a good rest of your week, and have a great weekend.